Hey, Dustin Tibbetts with Passport to Wall Street. Today's trade of the week is going to be on Dick's Sporting Goods. Not sure if you saw, but they reported earnings and the stock just shot higher. I believe it was about a 15% rise at one point. And so the symbol we said is DKS. We'll take a look and see what the technical traders are looking at and how we might be able to find a trade. So if we go over to the chart here, you can see the earnings report causing that big gap higher. Well, the gap higher traded above all short-term resistance. Now, in the short term, traders love that because it kind of represents an opportunity for the next level of resistance, which I think would be closer towards 40. Now, given that there's not a lot of room to work with here, the idea for me would be to just sell a naked put, very simply put. And the reason for that is because the risk to the downside, I believe, is sort of limited. Here's the trade. If we sell the $34 put, hopefully on another down day when the stock is moving towards the 34 number, what we'd end up with, at least at this moment, in July, if we sold the 34 put around 80 cents, we'll use the low end of it here. So if you collected 80 cents, that puts your average cost right about here on the charts. Now, if for some reason the stock falls to the 34 level and you were to be assigned on the position, then your risk, in my opinion, is from here down to the 200 moving average. So you have a very limited window of risk. Now, when you sell a naked put, you do expose yourself to the possibility of super low prices, and you could be stuck with the stock. But I think in this case, all the way up to the period of July, if we were to get assigned for some reason, the risk would only be down to the 200-day moving average, which really only gives you about $3 in risk, give or take a little bit there, depending on what you get for the put. So the trade of the week is to sell the $34 put in July, hopefully on a down move so you can get a little more than 80 cents, but 80 cents would be acceptable. That would allow for this stock to pull back, give the technical traders the reason to buy here at support, and if they don't buy there, then they've got the opportunity to buy within this gapping window. So the trade of the week on Dick's Sporting Goods, play in the retail sector using options as a naked position with a decent risk to reward on the sort of room until the 200-day moving average. I hope you enjoy. If you have any questions, feel free to let us know, and we'll talk to you soon.